Hello and welcome to Ticker Tapes. It's Friday, which means that we are looking at the world of meme stocks. Short sellers are increasing their positions in both GameStop and AMC Entertainment, and both now exceed the 20% mark, with shorts in AMC now controlling 22% of the float, whilst the bears in GameStop are now short of 23% of the company's stock, according to data from S3 Partners. However, other sources estimate that the real short position in GameStop could be as high as 28.9%, which would be a 15-month high if that's the case. GameStop rallied by almost 17% last week, trading up to $149.89. Its stock now bounced by 37.8% over the last 3 months. Those weekly gains came despite GameStop missing forecasts in its Q1 earnings report, with EPS coming in at a loss of $2.08 per share compared to expectations of a loss of just $1.45. However, the firm did beat on revenues, which came in at $1.378 billion versus a forecast of $1.32 billion. One area of concern might be the sharp uptick in the value of inventory held by GameStop, which stood at $917.6 million at the end of Q1 versus just $570.9 million in the same period in 2021. Retailers have boosted the stocks they carry rather than relying on a patchy supply chain. That's a sensible strategy if you can be certain of selling those additional goods to consumers. But if you can't, then as we saw with Target this week, you can be forced into a heavily discounted fire sale. Video streaming stock Roku Inc. jumped by 10.8% on Wednesday as rumors of a possible takeover approach from Netflix did the rounds. The insider website ran a story that suggested that Roku employees are buzzing about the possibility of being acquired. It's not the first time that the entertainment disruptor has been rumored to be a takeover target. The Wall Street Journal reported in January that the Comcast executive Brian Roberts was interested in the business. Even after Wednesday's gains, Roku remains down by 55% over the year to date, and at just $12.7 billion, its market cap makes it a bite-sized acquisition for any number of media or telecoms giants, including Netflix, which is valued at $88.23 billion currently. That said, Roku is still trading on a very demanding trailing PE ratio of 91.36 times earnings, which could be enough to put many prospective buyers off of the business. Brokers Benchmark thinks some kind of joint venture or distribution deal between Netflix and Roku is a more likely alternative, though it doesn't exclude a Netflix bid entirely. However, its analysts question whether Roku executives and investors would sell out at the bottom. Intriguingly, one of Roku's investors is none other than meme queen Cathie Wood and her ARK investment funds, and in particular, her actively managed ETF, the ARK Innovation ETF, which has more than $700 million invested in Roku.